Hi, this is Anita for Real Estate Crunch. Today we're going to talk about the five major types of real estate investment, some of their benefits, their drawbacks, and other things explained. First one is the multifamily real estate. Multifamily real estate is basically residential units that are designed to accommodate multiple families, such as apartment complexes, duplexes, and condominiums. Even though not technically multifamily, one investment people are single family homes as an investment. An investor may have one or may have several single family homes, which they rent out as basically as a multiple unit. The reason why these are popular among real estate investors is because it's usually a stable cash flow. There can be low vacancy rates, especially if you're in an area that has high demand. The vacancy rates can be extremely low. Also, you can have the economies of scale. In other words, if you managing multiple units in one location is often more efficient than managing several single-family homes. So this is the reason why a lot of people, they like to invest in apartments or duplexes, because it's really more efficient for them to be able to have the same property in the same similar locations. Easier financing. Lenders, tend to view multifamily properties as lower risk investments. The other one is industrial real estate. And industrial real estate is not the same as office real estate, but it is industrial real estate, which is basically warehouses, distribution centers, manufacturing facilities, and data centers. And one reason why this is popular is it does have a strong demand, especially with the rise of e-commerce, that a lot of people are looking for places to be able to have a warehouse. Long-term lease. Industrial properties often have a long-term lease associated with them. So this kind of gives a steady cash flow. You don't have to keep finding new people to be able to rent them out. They can have lower operating costs compared to some other types of property. Some of the cons of industrial real estate is their specialized use. They're tailored for a specific purpose. And let's say if people no longer need them, then it can be maybe hard to be able to change them into something. They can be economic sensitivity. They can have a higher demand on a broader economy. Economic sensitivity in that industrial properties are highly dependent upon the broader economy, especially things as manufacturing and trade. If manufacturing goes down or trade goes down, then it could mean they end up with these, empty warehouses and spaces. And location. It can really be dependent upon where they're located and as to whether or not it's a good and viable investment. Office real estate, can range from skyscrapers and urban centers to smaller suburban office buildings. And this sector is closely tied to the employment rate and business activity. Higher rental income, especially if you're in a prime office, if you own an office building in, downtown New York, which, might really have a long demand to it or a huge demand to it, you could end up with some, higher rental income. Long leases, tenants, especially corporations and businesses, they often want to sign a longer lease. They don't, moving as a business, and I've done this myself many times, can really be very expensive. So you don't want to move if you don't have to. And also, too, not only that is, whenever you move and, your customers lose where you're at, it can, be a problem. You lose business, too, that way. And customizable spaces, that office spaces can be adapted to meet various tenants' needs and increase appeal. Some of the cons of it is economic volatility. We have seen this like in cities like San Francisco, where, with the people working from home and other things, that the city is quite empty, and how do you turn these office spaces into apartments? It can be very expensive. Work from home, home trends has changed this too, where more people have working from home. Companies don't need offices as much, and it can have high operating costs. There can be maintenance, utilities, tenants improvements, can have a significant expense. And then on top of it, in a certain type of building, you probably have employees in the building, guards and cleaners and other things like that too. Retail real estate would include shopping malls, strip malls, and standalone stores. These properties, they thrive on consumer spending and foot traffic. The pros of investing in real estate, or retail real estate, is you get a diverse tenant base. Like retail properties often house a variety of tenants, including reliance on singles, so you don't have just the single source of income. You can have many types of tenants. They have a triple net lease, which is an NNN. Many retail leases require tenants to pay for property taxes, insurance, and maintenance, lowering the landlord's financial burden. So, in other words, as a landlord, you'll have less financial burden on maybe one of these properties. And if they're in a prime location or a high traffic area, this could be a great investment. Some of the cons of this is, of course, e-commerce. People maybe are not shopping at stores so much. They're not going to the shopping malls. That's why you're seeing now, trend in America. A lot of these strip malls and shopping malls are pretty much almost dead because people aren't going into them anymore. They can be very sensitive to the economy and economic cycles and consumer spending trends, and they can have a high tenant turnover. People may fail in a retail business or move somewhere else, or maybe there could be lots of different things that happen. Last one is hotel real estate. Hotels are full service resorts, limited service hotels, boutique accommodations. This type of property is closely tied to tourism and business travel. Some of the potentials there are that there's a high revenue potential, that hotels can generate significant income during peak seasons and in high demand locations. Dynamic pricing, the room price can be adjusted according to demand, so you can maximize your revenue potential. And diversification, hotels can cater to various customer segments, such as tourists and business travelers. Some of the cons of it is it can be seasonal, in that if you're in a location which is a seasonal location, you might find that your hotel is very full some months out of the year, but relatively empty other months out of the year. There can be very high operating costs associated with it, and they can be very economic, have a lot of economic sensitivity, which I think we saw a lot during the COVID time, where people weren't traveling anymore, and so the hotel industry and the tourism industry was suffering. If you'd like to be able to read more about this and learn more about these types of investments, you can read our blog post we've written called 5 Types of Real Estate Investment and Their Pros and Cons. We'll put a link in the description below. Thank you so much for listening. We hope that you'll check out our blog, realestatecrunch.com. And thank you so much for being part of our community.